Good morning. Welcome to the midweek edition of Business Morning on Channels Television. Well, let's get set for great business conversations this morning. I'm Ini John Mekwa, and we'll start that conversation from the oil space. Prices extended gains in early Asian trade today amid simmering geopolitical tensions as Russia cut gas supplies to Poland, while hopes of Chinese economic stimulus buoyed the demand outlook. Brent crude futures rose 44 cents to $105.43 a barrel, while U.S. West Texas Intermediate crude futures gained 12 cents to $101.82 a barrel. Crude prices settled about 3% higher yesterday in a volatile trade as the market is torn between supply and demand concerns over Russian oil and gas disruption and a worsening global economic outlook. Russia halted gas supplies to Poland and Bulgaria, I could ask, and later turned it on. As we speak now, it's actually off. While the raw cents and NYMEX ultra-low sulfur diesel futures up more than 9% yesterday to settle at $4.47 a gallon. That's a record close. The International Monetary Fund, the IMF, has warned that Asia faces a stagflationary outlook with the Ukraine war, a spike in commodity costs, and slowdown in China, creating significant uncertainty. In supply, U.S. government data on crude inventories, which is due later on today, the industry data showed that U.S. crude and distillate stocks rose last week, while gasoline inventories fell. And then we come to Nigeria, where the President Muhammadu Buhari, had a very busy day yesterday. He received the President of the African Development Bank, Dr. Akinwumi Adesina. He also met with the governors of Cross River, Kebbi, Sokoto State at the presidential villa. Well, here we're very interested in his talks with the AFDB presidents, which centered on food security for Nigeria. The president applauded the $1.5 billion African Emergency Fund plan developed by the AFDB, which is awaiting ratification by its board to forestall food crisis in Africa. And that's, of course, connected to the Russia invasion in Ukraine.
The president of the Africa Development Bank, Dr. Akinwumi Adesina, makes his first visits to the President Muhammadu Buhari this year. Against the backdrop of the Russia-Ukraine war, food security in Africa has sparked concerns. In a statement released by the Special Advisor to the President on Media and Publicity, Mr. Femi Adesina, the President applauded efforts by the bank to forestall a major food crisis in Africa through a $1.5 billion Africa Emergency Food Plan developed by the bank. According to the President, we are very much aware of the need for food security and to encourage our local farmers. That was why we closed our borders for about 2 years to curb smuggling. We made some progress, unquote. The AFDB boss also apprised the president of the bank's prediction that Africa will lose $11 billion worth of food owing to a fertilizer crisis expected to diminish food production by about 20%. The president also had other visitors. Atiku Bagudu of Kebbi State, who visited, albeit privately, Aminu Tambuwal of Sokoto State, a current presidential candidate of the PDP, and Ben Ayade of Cross River State, who happens to be the only governor of APC in the South-South. In a chat with State House correspondents, Governor Ayade reveals his presidential aspiration.
The truth is that my approach to the president is different. I will support the president's candidate. Even though I'm on standby, if I'm available, if I'm a choice, I will support the president's candidate. And the president says, you are not outside of my view. Go, I give you blessing, go and consult. Ensure that you engage with key people while I watch. So I think it's a clear indication that I have the right to go and try to go and declare. So I will.
In a question and answer session on contesting potentially with the former president, Goodluck Jonathan, if he joins the APC and becomes the party's flag bearer, Governor Ayade says he has respect for the former president and that if it is the decision of the APC to field him as its candidate, he would support him. From the presidential villa, Gloria Umezuke, Channels Television News.
Welcome back. Well, let's discuss the digital economy in Nigeria now. Well, the economy, which is has activities that result from billions of everyday online connections among people, businesses, devices, data, and processes, it has been said to worth about $11.5 trillion. That's globally, and that's equivalent to 15.5% of global GDP. Well, it has grown 2.5 times faster over the past 15 years, almost doubling since the pandemic. That's in 2000. In Nigeria, the information and communication technologies as the ICT sector contributed 17.92. I think it's the only sector that contributed double digits to the nation's GDP in the second quarter of 2021. Well, let's delve more into activities in the digital economy now with Bukola Olutayo. He is the managing director of Stellar's Digital Bank, joining us this morning. Good morning, Bukola. Thank you so much for sparing us some of your time. Well, I think one of the hottest stories in the digital space now is what's going on with Twitter.
Yes.
You know, I mean, I didn't think with the first reaction when Elon Musk made the proposal,
yes,
I didn't think that it would be so easy and fast, you know, that we'll see they having an agreement and then the sale of Twitter, you know, is almost coming to a conclusion.
Yeah, it's all about money, you understand? So, you know, Twitter was acquired by a sum of about $44 billion. Yes. And Elon Musk actually, you know, $25 million was actually through debt and about 21 through equity, as in the source of fund that he actually used to acquire it. And that's about 38% increase in the actual value of the shareholding that the initial director was actually holding. He bought it at about $54.2 per shares, and that's over 38% increase. And we're talking about money, you understand, that's a huge capital gain, you know, as regard those who actually held it. And I know when the previous owner of Twitter was being asked why he sold it, he actually said that he was trying to protect Twitter from sharks in the Wall Street, and he believes that it's Elon Musk that actually can, you know, take the vision, you know, ahead. You know, the acquisition talks a lot about the way digital asset actually increases, or digital company actually increases. You can hold a digital asset now and worth nothing, or might not be giving you income, but in the next day it could worth billions of dollars. And two major things that actually there's a factor to increase in the value of a digital asset is the numbers of subscribers or numbers of followers that are actually using it. You know, most digital assets, sometimes they make their money from advert, and people place advert where you know that a lot of people can actually see it, you understand? Eyeballs. So the number of subscribers, number of followers determine it. Or sometimes when that asset becomes a value or something that would aid the business idea of another person. Let's look at an example of maybe you buy maybe you buy a domain. A domain is just like a name, a registered name. It's actually worth nothing when you buy it and you keep it. But once there's somebody that needs that domain and feels that domain...
What gives it value? I mean, you can just buy it. I don't think it's everybody who has bought a domain or, you know, yes, or even has an account on a social media that is making money from it. So, so what adds value? What brings value to an asset, a digital asset, that could make it attract?
Yeah, I said it earlier. The major thing that brings value to it is the numbers of subscribers.
So it's now up to the proprietor to get those numbers.
To get those numbers, and it's also the same way it works for people who uses social media to make money. You know, the influencers, you know, the numbers of followers you have determines the numbers of, you know, the numbers of people who are actually seeing what you're doing, and then corporate organization can then come and place adverts on your page or whatever you're doing, because they know that a lot of people are going to be able to view or see it. And there are some digital assets that might not, the issue with digital asset and digital company is that it's the way it increases in value is very difficult to actually predict or to calculate. You understand?
It's
because
very volatile,
as you said,
it can just go.
It can just go. As you said earlier, that a lot of people have this asset. Some people have this. Some people bought domain, but nobody is actually looking for it. It's just maybe sometimes. What you can calculate is the number of followers, but sometimes a stroke of luck, you understand, because what you are holding can now become something another person needs. When you find out that this person needs it, even Elon Musk, when he bought Twitter, he wasn't actually talking about the reasons for buying it. It's not an economic reason. There's no economic reason behind it. He was just saying that he wanted to use it as a platform for freedom of speech. You understand? He doesn't want people to be restricted. There's already a thought that is going to tweak the policies that is behind what Twitter uses in guiding tweets. You understand? That is rather going to jettison with the policy, or is going to tweak it. So he even said he doesn't care about the economics that is behind the valuation of Twitter.
But how does this affect? I mean, Twitter is. We had the Twitter battle in Nigeria, where it was banned, took some time. And you have a lot of businesses, that's apart from individuals who have become influencers, and then they use it, corporates approach it.
E-commerce, the merchants,
Yes, you have a lot of businesses there. So with this change in the ownership and possible change in the running and the operations or structure of Twitter, how do you see it affecting us back here in Nigeria?
Well, a lot of things can actually change, because now Twitter is now a private company, not as it is before. What's going to be the governance structure going forward? Previously, there are boards that determine what should happen. There are boards that sit to determine how the affairs of Twitter should be run. Now, talking about the merchant or the e-commerce, now what's going to is Elon Musk going to be looking at increasing the innovation behind what will make the merchants to be able to sell their product faster on the Twitter platform? Or is he just interested in people just being able to say whatever they like? Because all he's been hammering on right now is that he wants it to be a platform for a freedom of speech. He actually even call it a digital village square or something like town square, where people can just come and air anything that they want to say. Is he really interested in an innovation that will aid the entrepreneurs or the merchants that are running there? The staffs of Twitter are also concerned about the cultural change. Those are some of the things we'll be expecting Elon Musk to put out, so that people will be able to know, okay, if this platform will still be able to aid their business or the reasons why they are there in the first place. Everybody is curious to know what he's going to do.
And when I cast our mind back to the battle with Twitter in Nigeria, it's connected to the issue of freedom of speech.
Freedom of speech,
remember stuff about the president's posting and things like that. So, and things are a bit different now, because social media, there's tax now, on corporate like that. So I'm just thinking that now that it's a private company, will they be willing to subject themselves to the condition that Twitter reached with Nigerian government, after the ban, which was, how come they were restored? So how do you see it from that perspective, with what Elon Musk has said so far about freedom of speech, and then the government in Nigeria is concerned about, not giving a platform
where people can just say anything they like.
Say anything. So how do you see it balancing out? And of course, we still have the businesses who need Twitter to run, to operate. And then you have the issue of the freedom of speech, which the Nigerian government is sensitive to. And now Elon Musk is saying, actually, I want this to be an open field for every expression.
It's a dicey situation, actually. the thing is that as long as Twitter wants to operate everywhere in the world, there will still need to be some balance, you understand? Because every country have their own policy as regard the freedom of speech. We also have a law that is, criminalizing hate speech as well. Some people could use the platform to be able to destabilize the society. So I believe that there's going to be a balance. Yes, despite him saying that he wants it to be a place for freedom of speech because it aids democracy across the globe. However, I believe that Elon Musk will still need to consider the differences in each of the countries, because all countries in the world are not the same. You will still need to abide with some of the regulations.
And I guess at the end of the day, it's still an investment, and he will seek to make money from it.
Definitely. Yes, he's very rich, but however, a rich man also don't just throw money away. So if he still wants to make money from it, that's one of the reasons why you will not have to bend to some of the policies that we have in different countries around that is guiding social media these days.
All right, so just before we get to the end of this conversation, let's talk a little bit about you, digital banking in Nigeria. Yeah. Your space is getting really competitive at this time.
Yes.
You have more players and...
Yeah, I think it is it's as a result of what is actually... what people are demanding for, what people want these days, because right now the digital economy is actually growing, you understand? And once there is an industry that is growing, you have more players, playing into it, because it is a place where there is opportunity for people to actually be able to make money. And it also helps to increase the employment and reduce unemployment, and also increase the numbers of income, the income that the country is also going to be getting in terms of tax and other things, and also FDI into the country as well too. So it's an industry that is growing. So it's not a surprise that more people are coming into it. So the digital economy for Nigeria is here to stay. It's just starting, and it is going to grow more, because there are different aspects of this digital economy. Digital bank is also one aspect. There are other aspects as well. The social media we talked about is also one aspect as well. So there are different aspects of it. However, if the government wants to enhance this industry and use it to make extra income or add more to our GDP, there's a lot the government needs to do.
You also have government attention. I think they're talking about regulations and all that.
Yeah.
How is that conversation with the government?
Well, beyond regulation, what we are used to here in Nigeria is that we build regulation to control. What the industry really needs now is a regulation that is going to actually deepen or expand the operation of the digital economy. That is going to expand the operation of the digital economy. So we have situations whereby the government have to increase the infrastructure, needs to actually develop skills of people, also deepen financial inclusion, the entrepreneurship.
What are you guys doing about it, the private sector? Everything is not supposed to be on the government. So what are you guys doing about that?
Yeah,
especially the skills acquisition and spread.
Definitely, yes. For every organization within this industry is actually training people to be able to, function in the right way in this field as well. You understand? And the private sector has also helped to open up the industries to foreign investors, who is also bringing in some forms of foreign investment into the country that I believe that Nigeria needs critically.
All right, certainly we do need it critically, and that's why we're looking for FX for importation and for manufacturing. Thank you so much, Bukola Olutayo, the Managing Director of Stellar's Digital Bank, for sharing your thoughts with us this morning. Appreciate that. Yeah. So we'll take a break. After the break, AFEX Commodities Market is next. So stay with us. This is Business Morning on Channels Television. it's AFEX time now. We see a flip from what we had last week. The bull is charging at AFEX Commodities Exchange as we see total turnover and volume traded more than 100% higher in the weekend at 25th of April compared to the previous week. And we have Femi Kende joining us now with the details. Hello, Femi. Tell us what happened. Over 100 for two of or more of your commodities.
Hi, good morning. Like you rightly said, we actually saw a significant increase in the liquidity in the market for the reporting week. In terms of the value, the turnover, we actually saw a 156% increase. In terms of the volume traded, we actually saw a 136% increase. And in terms of the numbers of deals, we actually saw a 66% increase for the reporting week. However, a different tone was actually seen for the financial benchmark reported on the exchange, as the AFEX Commodities Index declined by about 1.47% and the AFEX Export Index declined by about 1.27%. For the volume traded across all commodities listed on the exchange, maize, sorghum, soybean, sesame, and sorghum accounted for a significant proportion of the trade, as we actually see maize traded about 4.67 million contracts for the reporting week. In terms of commodities prices, we saw a different tone for some staples and export commodities as compared to other staples listed on the exchange. For maize closed the week at 224 naira per contract, representing a 1.6% increase week on week. For soybean, the commodity closed the week at 427 naira per contract, representing a 3.85% increase week on week. Sorghum closed the week at 435 naira per contract, representing a 3.19% increase week on week. However, paddy rice closed the week negative compared to the previously reported week, as the commodity closed at 232 naira per contract, representing a 6.79% decline week on week. Cocoa closed the week at 1,175 naira per contract, representing a 4.02% decrease week on week. And cashew closed the week at 678 naira per contract, representing a 3.4% decline week on week. Other commodities on the exchange remained relatively the same compared to the previously reported week. For more information about our report, you could actually follow us on our social media handle at AFEX Nigeria or COMEX by AFEX, or you could go to our website at africanexchange.com.
All right, Femi. Well, given this regular feedback you get from the broader market, how has your exchange improved the level of liquidity on its markets?
Yes, so on a periodic basis, the exchange has continued to receive feedback from the broader market on initiative or things we could do to improve the level of activities we experience on the exchange. Number one thing we've been able to, or one of the initiatives that we've actually seen result into a high level of increase in the level of liquidity will be the market making initiative, as currently players on the exchange are able to place order within the exchange price rules and guidelines and that are reasonable in the market, and these orders are matched immediately. So right now we don't actually see a 2-day waiting period, 3-day waiting period before contracts are matched, but because the commodities market on the exchange is extremely liquid as at now. Another important thing that we've been able to engage, or an initiative that we've rolled out that have actually resulted to a higher number of or higher level of liquidity on the market, would be our educational initiative, where on a periodic basis we educate the broader market, retail investors, institutional investors, domestic and foreign guys, or the fundamentals governing the market, or how to actually understand the fundamental play in the commodities market, ranging from how policies affect the commodities or price performance in the market, how international relations with other countries affect the price performance in the market, how weather conditions and production statistics actually dovetail into the productive or the production of commodities in the market, and how these ultimately affect prices. So on a periodic basis, we educate the market participants on these fundamentals, and we try to make them fully have a better understanding of the market. Another important thing would be the availability of research report on our exchange, spanning different or diverse sectors or segments of the commodities market. Some of these research reports will include State in Focus, where we talk about the key producing states for certain commodities. Some of the reports will also talk about certain commodities, detailing the value chain and how players in the sectors or in the value chain interact with one another. So these are initiatives we've been able to engage that help improve the level of liquidity we experience on our exchange.
Yeah, and it's been a while since the FETC's listing on the exchange. How has it performed? How have they performed so far?
So the exchange-traded commodity has actually done interestingly well on the exchange. And this would honestly be related to the skill of the fund manager, because the fund itself is actively managed, and the performance of the underlying commodities. The FETC1 has increased is currently returning about 18% since its initial listing in December. FETC2 is returning about 25% since its listing in February. And if you look at the underlying, or rather the underlying commodities, the performance of the underlying commodities in the market, you see that maize has returned about over 34% on the exchange since the start of the season in December. Soybean has returned about over 20%, sorghum over 20%, cashew over 50%. So with this in mind, and if you track the level of activities in the physical market, you know that a lot of the processors or a lot of the physical market players are now scrambling to restock their inventory position. So with this in mind, we know that there will continue to be an upward trajectory in the underlying price commodities performance in the market, and we expect that the FETC would honestly follow this trend to close at a positive for the investors.
All right, Femi Kende, thank you so much for giving us the details of how the market fared in the past week. Well, we are still in AFEX. It's still there in Abuja. We have Michael Martins, the portfolio manager, joining us to talk to us about food prices moving from crisis to stability. Hello, Michael. Well, between 2020 and now, the world's staple food prices soared to their highest levels. I mean, the war is not helping at this time. Economists believe that the kind of price roller coaster experiences then are likely to reoccur in the coming years. In other words, we're talking about food price volatility that may have come to stay. Tell us, Michael, from your findings, you guys are running the exchange now. What are the interventions that Africa can put in place to mitigate the negative effect of price swings on African as economies and as individuals?
Thank you very much, Ini, for that question. And I think it's very important considering where we are in Africa as a continent. But I think before I answer that question, I think it's important to just set the context, of what has happened with commodity food prices and by extension food crisis too, over the past 2 years and also over the past 2 months. So 2 years ago, we had a COVID-19 crisis, right? And the first thing that happened in response to that was that government started printing a lot of money and giving it to poor people. And what essentially do poor people buy? That's food. That's a demand-side issue, because you have to understand that with food prices and food crises, it can either be a demand-side issue or also a supply-side issue. So yes, the government printed money, gave it to poor people bought food. That's a demand-side drive. Also, at that same time, we also had the restricted movement of people, goods, and in this case, also commodities from one place to another, particularly in areas where they're, largely produced, to areas where they're largely consumed, right? So that's also a supply-side issue, right? So the combination of both issues 2 years ago, resulted in a significant increase in commodity prices. In addition to that, 2 months ago, we also had the Russia-Ukraine crisis, right? So governments, both in anticipation and also in response to that Russia-Ukraine crisis, have also been building up their own food reserve bank, right? So countries like China and also the United States have been buying commodities, like they're buying bread on the streets, right? So that's a demand-side issue. And it's also the case that some of the commodities that are produced within the Black Sea region in Ukraine and Russia have also had restricted movement, from places where they're largely produced, which is the Black Black Sea region, to places where they are largely consumed, which is, of course, the rest of the world. Another problem that also layers into that is also the high fertilizer prices that we've also had, due to the high price of natural gas and also urea. That would also set the tone, right, for what we will see for the next commodity trading season. But with regards to what we are currently seeing now, I think that sort of gives the context with regards to what has happened, in the commodities market globally over the past 2 years and also over the past 2 months. In terms of interventions that we can put into place as a continent in Africa, I think that they're broadly distinguished into two. So first, you have the short-term intervention, which would basically be for countries in Africa to build up their food reserve bank, right? So countries like Nigeria that have done, the strategic grain reserve, we would expect that same type of solution to also continue, at least for the short term, even though that would have a significant increase, effect in, on the prices of commodities, seeing that commodity prices would rise in the short term. But if governments are able to come up with those type of programs across board, across all the different countries, right, that would help modulate commodity prices over the course of, let's say, a 9-month period, which is the commodity trading season. In terms of long-term interventions that can be done, I think it's safe to say that the structural issues that exist within the commodities ecosystem do certainly need to be addressed. So issues surrounding, production, financing, and then also storage, right? So if you do a proxy analysis of the agricultural production value for 10 different agricultural commodities across 10 different countries, that value stands at approximately 45 billion. If you compare that with what the agricultural food import bill is, which is about 40 billion, what that tells you is that as a continent, we are importing nearly as much as we are producing, which is not a good thing. In addition to that, it's also, according to Dalberg, about a $65 billion agricultural financing gap in Africa as of today. So those are three structural issues that do need to be addressed if we are serious about addressing, the food crisis. There's also the idea of shifting the economy away from, commodities of focus into alternatives, because what is fundamentally important is the consumption of calories and not necessarily the foods that are consumed. Another issue which I think would also bring into bear your next question would also be the adoption of market-based risk management systems, which is, of course, the derivatives that we are building on the exchange. Because what happens in developed countries is that there are, futures and also forward contracts to which different participants can sort of hedge their risk in the commodities market. That doesn't currently exist at scale within the African continent today.
All right, Michael, this will be very brief now. What are some of the immediate steps that can help generate more and better information that is needed to allow greater transparency in trade on future market? Just briefly, Michael, we're almost out of time.
To be honest, I think that the simplest and probably the most important thing right now would be market education, right? So every single participant in the commodities market needs to be fully aware of the benefits, right, of trading, derivative contracts, futures contracts, such that they are then able to hedge, whatever position or whatever exposure that they have, in the commodities market. And this would apply to not just only the smallholder farmer, but also to processors who need these commodities on a day-to-day, and also to investors who are trying to play within the middle of those two different participants.
All right, Michael, knowledge is power, and I think that applies everywhere. Thank you so much, Michael, for that load of information from AFEX, and we do wish you the best. Of course, we want to put an end to the food insecurity in our space. From the commodities market to the money market, equities, fixed income, it's all on Will. Good morning.
You're saying it's all on me. Well, let's see how it goes, though. Now, positive sentiments have persisted. We've seen that positive sentiments are persisting in the equities market. This is quite good for investors. Now, the all-share index gained 0.05% yesterday to close at 48,568.57 points. Investors' interest now, the stocks that boosted it largely were Seplat, which was up about 6.8% yesterday. We saw Nigerian breweries also supporting the positive market performance. It was up by 8.4%. Now, the month-to-date and the year-to-date gains have, remained unchanged. They were 3.4% and 13.7% respectively. We're hoping that we'll see an uptake in that regard. Now we move to the volume and value of deals there. Total volume traded yesterday advanced by about 41% to 464.73 million units, which was valued at 7.01 billion naira, and all transacted in over 6,000 deals. Over to the fixed income market very quickly. We see also that the fixed income market traded slightly, a bit quiet yesterday following the bond auction we had on Monday. We're seeing less participation there. Investors are probably still waiting to see how it will play out in the secondary market. Treasury bills also are, traded bearish yesterday. Rates remained mostly unchanged after the close of trading yesterday. But we have Ramat Baba to tell us more about that. Good morning, Ramat Baba.
Good morning, Will.
Ramat, let's quickly look at the fixed income market. I mean, the bond auction that took place on Monday. Can you give us a breakdown of that bond auction result?
Okay, so first, going into the auction, general expectation was yields were going to trend higher, and of course, that was what we saw. There was a new maturity coming into that auction, that's the 2032 bond, and also this DMO reintroduced the 2025 maturity to replace the 2026 bond. Stop rate at the last auction for the 2026 was 10.15%, but then the 2025, which is a slightly shorter maturity, stopped at 10%. However, that particular maturity has been trading in the market way below 10%. It's been trading at about 9% levels there, about two. Market actually took it off at the auction. Then also for the 32s, for the bonds trading around the 32s, that's the 20, 34s, 36, 37, and maturities around it. They've been trading in the market at about 12.2 to about 12.3%. Expectation for that was that stop rate was going to be slightly higher, probably at about 12.4%, but we saw it come up at 12.5%. All this can actually be attributed to the fact that the auction wasn't very strong. It was actually a weak auction, and possibly because the DMO wanted to fill demand, they had to sell slightly more. Hence, rates went up. For the 2042 maturities, last auction, the stop rate was 4.7%, and we saw it stop at 12.9% this time around. Of course, before the market had there had already been a sell-off on that maturity, and we were seeing yields trending up in the last couple of weeks. So it was also in line with expectations, even though a few market participants had expected that the stop rate would probably touch the 15% levels.
For the, we'll look quickly at that result again. We see that the 10-year and 20-year papers had a non-competitive allotment. Is this a normal thing? Because we've not seen it in the past auctions for a while now.
Yes, it's actually a norm in that space. So usually there's a non-competitive bid that comes in, and the DMO also uses it to fill in demand. It's usually from probably government parastatals and other investors besides your regular banks and HNI clients.
So what do we expect now? There's going to be an auction today. What do we expect quickly from the expectations from the NTB auction?
Yes, there's an NTB auction today. Last stop rate at the auction 2 weeks ago was 4.6% for the 1-year paper. Expectation is that the 1 year should touch at least 4.75 this time around. That's given the general expectation again that yields will continue to go higher. Of course, as we go closer towards the end of the year and towards the election period, we expect yields to keep climbing higher. The auction seems weak so far from what we've seen, so we expect yields to probably go higher. And the reason for that is because most people are just not interested in locking up in the 1 year paper at 4.75% when they believe yields will go higher. So what we've seen markets do in the last few days is pick up the 90 days and other short tenor securities, NT bills or OMO bills, really trading around 3% levels as against to locking up for 1 year at about below 5% levels.
Thank you so much, Ramat Baba, fixed income dealer at FBN Quest Merchant Bank. Thank you so much for the insights you brought on the program today. So, Ini, we have what Ramat has said. They're expecting yields to go up, slightly up. I mean, for the rest of the week, we're hoping that tomorrow, well, today's trade will show that.
Yeah, and
we'll
then
see
the auction you talked about.
Auction that's going to come out today. So we'll see how investors dig into that, you know.
Yeah, we hope that the positive sentiment in the equities will spill over to the fixed income space.
Yes, a little creamy side of it should come over to the fixed income market.
Creamy side. All right, thank you so much, Will. Thanks. So now we'll take a break. When we come back, we have Juliana back in the studio after the delegation visit. I'll talk to her afterwards. That's on Business Morning here on Channels Television to join us again. You're welcome. welcome back. We head to London now. It's good to have Juliana back in the studios. Juliana, good morning.
Good morning, Annie. It's good to be back.
Yeah, sure. Well, Ukraine is really grateful to the UK government with this announcement of trade measures to support them. And I learned some other countries agreeing with envy and asking for their own portion also.
Well, absolutely, Nigeria being one of them, which is why we've just finished that trade meeting. But despite a pretty slow start, I think it's fair to say that the UK has led the West in trying to support Ukraine. And this recent announcement is part of a wide, broader economic stimulus plan to support Volodymyr Zelensky as much as possible. And what was announced yesterday by the British government is that now any imports that come into the United Kingdom from Ukraine will no longer be subject to any tariffs or quota rates. So they have been completely reduced to 0%. And again, I think this was first mentioned by Prime Minister Boris Johnson when he made that surprise visit to Kyiv a couple of weeks ago. And then yesterday, during a meeting between Anne-Marie Trevelyan, which is the International Trade Secretary, with the Ukrainian ambassador to the United Kingdom, that was reiterated, and then it was swiftly followed by a government release explaining this, as well as saying that all imports will no longer be subject to tariffs. The British government also announced more sanctions on Russia. Now tariffs on Russian goods coming into the United Kingdom, including items such as diamond and rubber, they will be subject to 35% tariffs. So yes, the Ukrainian Prime Minister has been really clear. The Ukrainian leader Volodymyr Zelensky has been very, very clear in welcoming the support from the British government. They've also donated thousands of fire engines, ambulances, as well as a pretty swift military defence equipment. We know that Ukrainian soldiers are currently being trained at a secret location in Britain, so they're able to use some of this equipment. And yes, again, it just doubles down on the fact that Prime Minister Boris Johnson, for the very least, no matter what his colourful personality has been like, he has been a very solid ally to the Ukrainians.
Yeah, colourful indeed, Juliana. Well, in the year of the squeeze, every penny is very important. That's why we're talking about vampire devices. Tell us about that, Juliana.
Yeah, this is really interesting, actually. Vampire is a blood-sucking terminology or a fiend, and lots of energy companies, energy bosses and campaign groups are using that term to describe some items in people's homes that are sucking out all of the energy, and they are suggesting to people, do turn these items off because they take much more energy than you would expect. We're talking about lights, of course, which is a big one, kettles, not letting your hot water run for as long as possible, gas too, and also chargers and plugs. Just make sure you're switching them off. And of course, it comes at a time when we know that energy bills are 54% higher than they were this time last year. We are expecting, unfortunately, another rise in the energy cap by Ofgem when they meet again in October. So anything that people can do to try and save some money is the best. And because it is getting a little bit warmer now, we're hoping that people will be able to reduce their bills because they won't be getting putting their heating on, but certainly they will be cooking. So yes, don't burn your food. Turn off the gas cooker as soon as you can.
I think we'll have a list of those items, Juliana. Well, thank you so much. We'll talk to you during Business Incorporated at 1:30.
Thanks, Annie.
Let's move to the crypto space now. We've had our commodity talks. Let's go to the crypto space now with Ladi. Ladi, are you smiling this morning?
I'm smiling,
do I
but
see a smile
the
on your
market
face?
is not smiling. I'm smiling because my prophecy, you know, the one we talked about earlier didn't come through because sell-offs came earlier than expected. I was expecting those sell-offs to come out around Thursday. I guess I'm not the prophet.
Are you a fake prophet?
Maybe not fake, maybe just not a prophet. And we're seeing the market back in extreme fear again, deeper into extreme fear today at 21 points. Talking about the sentiment in the crypto space this morning. We saw the sell-offs yesterday thanks to the NASDAQ there dropping almost 4% yesterday, and we've talked about the correlation between the Bitcoin market and the tech-heavy NASDAQ, and we've seen that play out today. Market cap down by $1.78 trillion. It's down 4%. Volume traded in the total crypto space is down this morning about 2.31%. Due to the sell-offs we saw, Bitcoin dominance, 41.13%, and we see price of Bitcoin lost that $40,000 range. It's back to the $38,000 point, down 4.65%. Volume traded $34.16 billion, and we see Ethereum also losing the $3,000 mark, down about 4.26%. Volume traded $19.43 billion, and we see it's all red at the top alts by market cap. No coin is spared at this point except for ZRX, I saw earlier, topping the gainers counter. All right, now for our conversation, let's have Amari Sachet. We're talking about this report. Hello, Amari, great to have you.
Hey, great to be here.
Yeah, so Bitcoin mining, we've had those concerns about how much electricity, Bitcoin mining, consumes. And now there's a report saying that usage in the first quarter, electricity usage in the first quarter dropped by 25%. Is this, saying Bitcoin is not consuming as much anymore, or is anything being done at this point?
So yeah, Bitcoin is not consuming as much electricity anymore. It comes from two factors, essentially. The first one is that over the past year or so, the price of Bitcoin has been going down, and therefore there is less revenue to make for miners. And so if there is less revenue to make, then they're going to spend less of that revenue on electricity. And on the other end, the price of electricity have increased, right? So at the end of the day, what that means is that the number of people who can mine in an economical fashion without losing money has reduced, right? And some of those miners have to stop operation. In the short term, that's a bad news, right? That means that the market is not doing good. But in the mid to long term, that's actually a pretty good news for crypto enthusiasts, because that means that the supply and demand are re-equilibrating, right? If miners are closing, those miners, they had to sell crypto to pay for their electricity bill, right? And so that supply that's coming on the market. And so, by the law of supply of demand, that's a depreciation of the price. So as, we don't spend so much electricity on mining, then less coins are going to hit the market. And as a result, we can go through a consolidation phase and, within a few months, probably going back up again. But, the price we pay for that is less security on the network, because, there are less miners that are securing the network. But, on Bitcoin, it's been pretty high for a pretty long time. There have been no attacks on the network that have been successful on that front. So it's probably okay. For smaller coins, like eCash or Bitcoin Cash, it's a bit more of a concern maybe, but when it comes to eCash, we are releasing a technology, either late this month or in May, to prevent any problem on that front. So we should be good.
So that means most of the forks of Bitcoin are actually mined the same way. And if the market turns, turns bullish, then we might see these prices actually start turning up again.
Yeah, it's probably going to take some times, right? It's not something that's going to happen tomorrow, because before that happens, you need to have some consolidation, right? Those miners that are not economical anymore, they're going to have to, pay for the expense. They're going to have to sell the hardware maybe to other miners that are more efficient. So all of that, it's probably going to take a few weeks, probably even a few months before it's all settled down. But after that, we should see a decrease in the amount of coins that come on the market from the mining side of the market, which means that, by the law of supply and demand, it should be better for holders.
All right, but just a hypothetical, situation. Now, take, for instance, energy prices are so high and miners, don't want to mine Bitcoin anymore. What happens to the network?
Not much, right? Because what happens is that if less people mine on Bitcoin, it becomes easier to mine. And if more people mine, it becomes harder to mine, right? So if electricity price raised by a lot and much less people can mine, then a lot of people are going to stop. And for the one that remains, it's going to become easier. And the network is going to continue to chug along.
Quite interesting. Thank you, Amari Sachet. Always great having your expertise, when it comes to Bitcoin and mining. Thank you so much. All right, so top of the market cap, we see it's all red on that counter, and you see Cardano there down about 5.37%, eCash down 6.54%, and the XRP still at 60 cents range there, down about 3.79%. It's bloody red. But we're seeing ZRX there topping the gainers counter with a nice 11.29% rise this morning. So, and it's not all doom and gloom in the market. Some also doing well, like the APE and ZRX, and we see all the stable coins there showing that traders are running into stable currency at this point.
Yeah,
they're very afraid.
At this
time to hedge.
All right, Ladi, thank you so much for that update from the crypto space.
Thank you.
That's where we drop it off for today on Business Morning. We do appreciate your time in the last 55 minutes. But let's do it again tomorrow. We know it will be worth your time. I'm Ini John Mekwa. Don't forget, 1:30, Business Incorporated will be here. So you have updates from the world of business. Thank you so much for joining us.